Hey everybody, it is Chuck Barone on Wednesday, August 28th, 2024. Another crazy day in this, man, I gotta say, we're living history, guys. You've heard me say it a million Brazilian times. They're going to write about this era. Historians are going to look back at it. To us, it just seems like what we're living every day. I got to tell you, the extraordinary times we are living in right now. It's incredible. It's as amazing as the world is. We should be the happiest we ever have been right now. Americans we got the best of it, right? Living longer, travel easier, faster, communication faster, easier, cheaper. Remember when they charge you by the minute for your cell phone? I'm old enough to remember that. Everything, medical care, lifespan. I mean, everything in the country getting better. I mean, as far as I'm talking a big picture, not a little tiny picture, right? Macro. Some of the micros, not so much, but we should be happy, and nobody is. Isn't that the strangest thing ever, guys? We take a lot for granted that we should be grateful for. And the anyway, you guys get my point. I babble sometimes. Sorry. Anyway, before I get rolling, let me take a half a second. Welcome everybody to the show. As always, thank you guys for your support. Nice to see everybody on the chat today. Oh, hey, Jordan on today. Nice. Wolf, the usual suspects, Attila, Smoke, Dave and Molly, the regular crew. I haven't seen Where's Salty? I haven't seen him for a while. And I guess Para's traveling this week, right? Anyway, I'm sure everybody will be checking in. Anyway, let's talk about markets today. So we knew today was going to kind of be a weird day, a nothing day, no real data that I found. So basically, we're waiting now. Tomorrow we'll get jobless and some other data. Friday, PCE. We get consumer data. So the finish, we're going to get a big finish these next couple of days. But today is that kind of weird day in the middle. So the markets just were weird today. So the stock market, not a good day. Stocks down across the board. The Dow falls 159 points, sitting at 41,091 points. A very good number for the Dow, but sorry, no record today. The NASDAQ falls 198 points, 17,556. The whole thing on the NASDAQ and all the techies today affecting the NASDAQ and the S&P. NVIDIA earnings and guidance coming out any second, and that's what everybody's all anticipating, freaking out, going crazy about, right? So the NASDAQ down 198, the S&P down 33 points, sitting at 5,542 on the S&P 500. So all these indexes are very good numbers, very lofty numbers, just off record highs here. I guess market hedging its bets a little bit depending on what's going to be happening with the data over the next couple of days. Bond market, kind of a weird day, but check it out. So the 10-year actually going up today 1 basis point, 3.84% on the 10-year. The 2-year falls 5 basis points, now 3.86. So now you got a 2 basis point inversion. Maybe tomorrow it could go right back to a normal looking yield curve. Crazy. I got to say, I can't remember this happening. Not like this, not without a recession. So very, very strange doings in the bond market. We had the Treasury in the bond market yesterday and today and tomorrow in a big way. Talk about that in a second. So bond market, a weird day there. The dollar today rallies up. Like I said, it's a weird day. You'd figure with interest rates coming, interest rate cuts coming, dollar wouldn't be rallying up, but it does. Up 56 basis points to a good day for the dollar. Back up over 101, 101.11 on the index. So I'm happy. I like that. Sorry, I'm a strong dollar guy, and I would like to see it lofty. Sorry. Metals today, strong dollar. Not a great day for gold and silver. Gold falls $16.20, sitting at $2,508.70 for an ounce of gold. Silver falls 72 cents. $29.19 for an ounce of silver. So still decent numbers for both. You guys have heard me say it a million times. Silver should be higher than it is. That's my, I can't seem to figure that one out. But what'll happen is when I finally give up, that's when you'll see the rocket ship blast off, right? But anyway, I think silver is due for a big rally. Gold's still holding its own at over $2,500, looking good. Oil today falls 81 cents per barrel, $74.72, right where we expect it to be in that trough between 70 and 75. I gotta say, we've been right about oil prices for sure. So anyway, I don't have a real move out of this trough unless there's something geopolitical that happens. As far as supply and demand goes, the economics of, I think that if they're left to their own devices, oil prices will continue to come down. Bitcoin down today, got beat up a little bit, down $3,040. Tough day for Bitcoin. Now at 58,977. So here's the big test of that support at 60,000. We'll see over the next couple of days if it can bounce back up over that. So Bitcoin at a little bit of a crossroads right here. Is it going to break through support and make the next leg higher, or is it going to not and probably tank back down to the low 50s before it bounces back up again? All right, let's move on to stuff we need to know. So we know, guys, that rate cuts are coming. Very much believing now, starting in September, Powell pretty much, without exactly announcing, we're going to explicitly saying we're going to cut rates in September, he pretty much said we're going to cut rates in September. So starting in September, we'll get a 1/4 point rate cut there. We know this is coming. Interesting report today, JP Morgan analysis. JP Morgan believes between now, or the September meeting actually, between the September meeting and the end of the year, the Fed will shave 100 basis points off their overnight rate. So they see, the Fed funds rate going from 5.35 where it is now all the way down to 4.35, a whole point decrease, they believe, by the end of this year. So over the next 3 Fed funds meetings, they're seeing somewhere in one of those 3 a 1/2 point cut. It would be amazing to see the Fed cut rates a 1/2 point during an election like this, especially one that's so close and that Trump is involved in, and doing something that would be what I'm sure he would assume is contrary to his interests. Got to see it, man. Can't wait. So anyway, the Fed now saying that JP Morgan saying the Fed's hand will be forced on these rate cuts by worsening job conditions, job situation, right? Jobs not going as good. The Fed has the dual mandate, right? Price stability, maximum employment, right? So they're saying that the jobs thing is a little bit worse than we're realizing. They claim that uncertainty in the demand for labor, now it looks like business is cooling off. They're not cutting people so much yet, but they're not hiring people like they were either, right? So uncertainty in labor demand. You have rising supply of labor, more people getting back into the workforce, especially people discovering how expensive it is to try to retire in this country right now. So you have rising supply of labor, and then you have big productivity gains. Even though paychecks have been going up a little bit, productivity gains have been big, guys, big gains. So, the Fed has some reasons to be worried about this stuff, right? They said that the Fed is now shifting course from a gradualist to something more aggressive. So the Fed kind of had it in their head they were going to lower rates very gradually, kind of how they did raising rates, but without the 75 basis point hikes, right? So it's interesting stuff here that they were saying, talking about the Fed's balance, and now they're going to have to kind of look to the employment side. Now, they said the big fear the Fed has is being late to the dance, right? So if you wait too long to cut rates, or if you only cut them superficially, like that half the quarter we're going to get in September, that'll change the psychology a little bit, but it won't really be the big wow economically, right? So the Fed now a little bit worried they're going to be too late into the game and too cautious in their lowering of rates. Instead of getting their soft landing, getting something much worse, say, I guess is that how you say recession now? Hard landing? Because that's, if they don't pull this off, guys, that's exactly what we're going to get. Okay, so we got one of two things is going to happen. We're going to have the mythical soft landing, which, to my knowledge, I don't think they've ever actually pulled off, or we're going to have a recession. Now, I'm not saying it's going to be a deep one like, oh my God, 2008 kind of recession. Just a slowing down of the economy and enough to make the Federal Reserve move a little bit faster, right? Now, Friday, with PCE coming Friday, that's going to be even now more magnified, bigger day, because they're going to be looking at that inflation number. We already know kind of where labor is going. Tomorrow, we'll get unemployment numbers. We know toward the beginning in September, we're going to get August jobs numbers. So there's a lot of data coming quickly that's going to weigh into how the Fed's going to play these rate cuts, guys. Fascinating stuff, because now the market's already completely 100% on the move from tightening to loosening as far as monetary policy. Now the bets are all how far, how fast. How deep are they going to cut? How fast are they going to cut? Everybody, the casino, the wheel is whirling, and everybody placing their bets accordingly. It's going to be fascinating. We get a nice seat to watch all of this happen. And the good news is, if you've been following our advice, this is interesting. It could affect your portfolio just a scooch, but it's either way, it's not going to be a calamity for us. So we get to watch it and be amused by it, right? All right. Treasury in the bond market, guys. You heard me complain about this. I'm going to continue forever. Yesterday, Treasuries, 69 billion freaking dollars yesterday in a bond auction. 2-year Treasuries actually had super strong demand. Actually, the demand was so high they could lower rates. Somebody was buying Treasuries, 2 years. Now today, 5-year, big auction of 5 years. Tomorrow, a huge auction of 7-year notes. Treasury in this bond market in such a huge way, guys. They're in the Fed's way. Let's just say that, right? Because when you have, we've talked about simplicity in economics on the show a lot. And that's how you really can figure things out, is always try to boil it down to its simplest, right? So what's the most simple thing in economics? Supply and demand, right? Now, obviously, people buying up these bonds, so the demand is there, okay? But the supply now is so incredibly overwhelming, and they're in the bond market so often with these huge auctions. I mean, 70 billion freaking dollars is a big auction, man. Okay? I mean, these guys just, I guess basically they feel like because they're borrowing the money, they're printing it. But we have to pay it back someday, somehow. And we already know interest payments, what's happening with interest payments on our national debt. Now it's actually the biggest expense we have, and the biggest expense the government has is interest on debt. So I can't wait to see how Trump or Harris are going to try and deal with this debt, because neither one of them that I have heard is proposing or even talking about the debt. They both have a whole bunch of stuff they want to do that's going to cost money. So they're not even looking in any way, shape, or form at saving money. And I guess really in this campaign, from what I'm hearing, there really just is not much talk of the deficit. It's not really a campaign issue. Inflation, yeah. People may hint at the debt. They don't really talk about it. It's inflation. It's abortion. It's gun rights. It's crime and immigration. That's what they're talking about, not 36 trillion, not friggin' almost $1 trillion a year in interest payments. They're talking about that, but they should be. All right, moving on. Berkshire Hathaway. You guys know I've always admired Warren Buffett. I've always admired his partner, Charlie Munger. These old boys, not only have they built something from nothing, the most massive company, Jesus, man. So Berkshire Hathaway, check it out, guys, just recently passes $1 trillion freaking dollars in value. The 8th company in the world ever do it. The first company outside of tech to reach 1 trillion valuation. Buffett started this company way, way, way back in the day. Him and Charlie partnering, and they built this company up from nothing, just with their acquisitions and their brains and the way they invest. They built this company up. Listen to this, guys. Today, a share of Class A Berkshire stock, okay? One share, $691,454. They've never split the stock. And more, they talk about Microsoft millionaires and the tech companies. Imagine the people that bought into Berkshire way, way, way back in the early 60s when Buffett was putting it all together. 691,000 per share. I remember when I was at Lehman, guys were buying one share. I think it was around 38 grand a share then. And I thought that was astonishing for one share of stock. A lot of brokers at Lehman were buying that one share for their portfolio just so they could go to the annual meeting every year. Guys would actually go to Omaha, eat steaks, go listen to Charlie and Warren Buffett talk, and always come back with big stories. Now, imagine that $38,000 share of stock that you thought was outrageous then is now $691 freaking $1,000. Unbelievable. Congratulations to these guys. I love their old school methods, guys. These are the guys who he does truth. He lives very, very simply. Warren Buffett bought his house in the 50s when he was young and not a billionaire. Still lives in the same house. His daughter had to make him buy a new car because they were embarrassed by the pickup truck he was driving around. Charlie Munger went and talked nonstop about why he doesn't buy mansions and how wealth today is different than it used to be. It used to be about piling up money. These people today want to flash. They want Brazilian dollar mansions. They want all kind of stuff. And these guys living it the old school way. Congratulations to these guys. Genius. Listen to this, guys. Treasury Department, doing their homework, say that wages have risen faster than inflation since the start of this inflation outbreak. And right now, the average worker person, now this obviously doesn't apply to everybody, because if you're a commission guy like Jordan and I, real estate, we do commission. If you're retired on a fixed income, whatever, it's a little different. Regular working people, though, not only have earned enough additional income, because incomes have risen as well, to pay for the products they buy at that inflated price, but they should have an additional $1,400 per year in additional income. That's what the Treasury says. Not so sure about that, right? Because they're trying to convince everybody that things are better than people believe they are, okay? Government a little bit out of touch with what working people are dealing with, right? I mean, check it out, guys. What do we have here in the world? Food costs, outrageous, right? We're all paying more at the supermarket, and I know I'm friggin' hating it, right? You got rent and mortgage payments. We already know what's that story there. Insurance, car, homeowners, health, outrageous, nuts. Real estate taxes. If you own a house, your taxes going up, everybody's all right. You got energy costs. How's your power bill, guys? Right? You got everything going up, your water bill, everything, travel, on and on, people paying more. And this is the stuff everybody does every day, right? You eat, you drink water, you have a place to live, right? I mean, this is the everyday stuff. It's not like the cost of a Rolls Royce went higher. Who cares? This is living stuff every day we deal with, and that's why there's a big disconnect between what the government and their statistics say about a great economy and what people are living every freaking day in their lives, right? This is not exactly what a great economy looks like. People cutting corners, putting off home repairs, putting off additions, putting off people delaying, not doing stuff. Guess what? Not exactly what a great economy looks like, guys. The average worker, listen to this, guys. The things are so skewed now between the top and the bottom, what people are earning. The average worker now needs 5 lifetimes, 5 lives to earn what the average CEO of an S&P 500 company earns in 1 year. 5 lifetimes, regular worker, 1 year, CEO, S&P 500 company. S&P 500 CEOs averaged 17.7 million freaking dollars, which would take you and I 5 lifetimes to earn. The beat goes on, guys. Anyway, that's it for the day. I've been babbling on way too long. We know tomorrow's a big one. Friday, too. I'll see you guys here. Hit the likes, hit the thumbs up, guys, on your way out. We'll see everybody tomorrow. Thanks, everybody on the chat. You guys rule. And we'll be back tomorrow to bring you the news you need. Love you, everybody. See you tomorrow.